So I'm delighted this evening to be with Daryl Norkett from LendWell. Daryl, you've had an interesting background in terms of finance from Barclays, moving on to Shawbrook, and now to LendWell. So, do you want to explain to the listeners out there who LendWell is? Because relatively new to the market, most people in terms of property have heard of Shawbrook. I'd be amazed if there's anyone who hasn't, but maybe there's one or two who haven't. But who is LendWell?
Yeah, I mean, it's kind of interesting because actually when I joined Shawbrook in 2015, there were plenty of people that hadn't heard of us. But so LendWell is a brand new specialist property lender. There's 7 of us. Most of us are part of the team that helped to build Shawbrook Bank. So we literally started lending just before Christmas. We're about to kind of launch to market formally on the 26th of February. And we're specialising in refurbishment, bridging and light development deals. And that's particularly relevant for the commercial summit, of course, because one of the big trends in the market at the moment is commercial to residential conversions.
So, Daryl, in terms of your presentation, which is about creating value in a changing market, can you elaborate on that presentation?
Yeah, so I'm gonna talk about 2 things really. So I'm going to talk about how the retail market in particular is changing at the moment. And there's a drive towards smaller, almost showroom type units rather than big shops with lots of stock and warehousing space. So you can get your warehousing anywhere now, and you can order things online and get quick deliveries and that kind of stuff. So I think the future of retail is kind of smaller shopfront units. And I think that is particularly interesting for property investors because it begs the question, what do you do with the rest of that space? And I think it's prime for conversion to residential spaces. I think some more upmarket high streets will have a mix of residential, commercial, which could be retail, could be cafes, could be restaurants. And I think there's big opportunity at the moment for investors to create value for mixed use sites in particular. And then once we've spoken about that, which is really about kind of how you can change assets around to maximise the value, I'm going to talk a little bit about the dynamics of holding a commercial property as a long-term investment. They work differently to residential. Yields can be higher. Some would argue management is less intensive because you have what's called a full repairing and insuring lease, which means that the tenant is responsible for quite a lot of the upkeep of that property. But on the flip side, they do come with some additional risks. So void periods tend to be longer, and it suits an investor that really knows what sort of demand there is in their local area for what types of businesses and what types of spaces that they would like to trade from.
Sure. So it's interesting you mentioned about FRI because I was with Ranjan yesterday, Ranjan Bhattacharya, who's chairing the retail panel, and Ranjan said to me, he got an email from one of his tenants, commercial tenants, saying the signage to come off, and Ranjan, or one of Ranjan's assistants had sent back an email saying, look, it's an FRI contract, so we're not responsible. Whereas with the storm, which has just happened, any residential landlord is responsible mostly or on the whole for things like things coming off the building and so forth. So look, so in terms of retail, you see it being smaller units, more showroom based. Do you see other changes, or what did you notice? Because you at Shawbrook, for example, you were quite heavily involved in doing research in retail. Did you see geographical differences as well?
So the commercial market's really interesting, actually. So my last role at Shawbrook was called Head of Products and Markets, which is a kind of fancy title, really, for kind of coming up with what parts of the property market that we should do more lending in and what parts perhaps we should do less lending in, and the most effective way to lend into those markets. And last year was obviously a pretty turbulent year. We were kind of all waiting for Brexit. Will it happen? Won't it happen? We were waiting for elections and all this kind of stuff. So it's kind of an interesting time. But we chose back last May now to relaunch Shawbrook's commercial investment proposition. And an awful amount of work went into that. We did a lot of research. We spoke to a lot of people. So one of the things that I'd say with commercial is that much of the data that's available publicly, so CBRE, for example, are probably the main source of data on trends in commercial property, is based on properties that are out of reach for most of the kind of investors that I work with. So things like, £20 million London prime offices and £10 million industrial parks and retail parks and all this kind of stuff. And so what I found actually, that whilst those trends were basically saying industrial was set to grow in value, office was set to stay broadly flat, and retail was set to shrink, I kind of looked at it from a Shawbrook perspective, where we were doing anything from 50 grand loans all the way up to kind of 25 million, and kind of thought, actually, I'm not sure how relevant that data is for our clients.
Fascinating.
So I actually think the key for commercial, if you're a smaller investor doing what I would call day-to-day deals, and a day-to-day deal for me is kind of a couple of 100,000 all the way up to maybe kind of 5 or 6 million. I don't really think it's about wider economic trends. I think it's about your local area. I think it's about what your local area needs and what's in short supply. So there's plenty of areas now where they're actually crying out for office space because everything that was there has been converted under permitted development to residential, but actually businesses still need offices to work from. I think there's a fantastic opportunity with serviced office space for smaller businesses, a bit like the unit you're sitting in now, Brendan. And I think in some markets and in some places, there is still good opportunity for retail, as long as you understand the tenant that you're going to put in and exactly what place that particular asset, or what role that particular asset plays in that local high street.
Daryl, so look, I found it really interesting that you can't just rely on CBRE data because you don't think it's necessarily always relevant. So where's the data from, or is it just literally talking to surveyors, or how did you accumulate the data?
So I think surveyors are a great source of sentiment and of some data for what they've seen in their area. So Rick's produced some research, Savills produced some really great research as well. There's a couple of kind of business management consultancy type firms, one of them called Mintel, for example, that produce some pretty interesting pieces that, again, if I was going to critique them, I'd say they're too reliant on large assets out of the reach of most of the sort of clients that I work with. But ultimately, there's still a lot of valuable information that comes out of them. And there's a couple of kind of newer firms that do manual research. So there's a firm called CoStar, for instance, which is based in Shard in London. So what CoStar do is they have a field-based team that literally goes around and they find properties that are for sale or to let in the commercial space, and sites that have got planning to develop into commercial. They track them down, they track down the agents that are dealing with them, and they kind of stay close to those transactions, and they figure out, well, who's let this property, how much have they let it for, how long the lease is for, and then they also track the transaction. So who's selling property, who's buying commercial property in that area. So that's a really kind of interesting tool, because whilst that's a very manual thing to accumulate, the CoStar data is really interesting, because I would argue that is more relevant to most day-to-day property investors.
So, Daryl, how can people reach out to LendWell, and what are the opportunities? So, in terms of geographical area, is it London? Is it the southeast? Are you looking to go slightly beyond the southeast in terms of the geographical? And what type of property opportunities are you interested in being involved in terms financially?
Yes, I mean, geographically, we can lend anywhere in England and Wales. We're based in Essex, so we do tend to do a lot of business in London and the southeast, but we're funding some deals at the moment in Manchester and up north and all around. So for us, it's not really, we're not going to worry too much about location, because I think there's good opportunities in all locations. But we're really focused on kind of meeting clients who are active. And for us, the real sweet spot at the moment is anyone who's looking for tired or dilapidated property that they think they can add value to. So that could be everything from refurbishing a tired flat and putting in new kitchens and bathrooms, through to creating high-end HMOs with extensions and loft conversions, all the way through to commercial to residential conversions or reconfigurations, where some commercial space is retained and some new residential space is created.
Now, I just want to say massive thanks for this fascinating interview. this evening. How can people, of course, come along to the Commercial Property Summit on the 7th of March in London? Delighted that LendWell is going to be one of the exhibitors. Also, Sealants, Hearn, and Bond Finance. How else can people connect with you? You can find yourself on LinkedIn, I'm sure. What's the website for LendWell?
Yeah, so absolutely. I'm active on LinkedIn, so anyone who wants to get in touch, fire me a message and I'll get back to you. You can find us at www.lendwell.co.uk. Get in touch. We'd love to speak to anyone who's active and involved in property.
So just want to say a massive thanks for taking time out this evening, Daryl, and I look forward to seeing you very shortly on the 7th of March at the Commercial Property Summit. Thank you.
Thanks, Brendan.